Welcome back. Well, let's take a look at the market right now because we're just around the 23,500, holding on to the green largely. A percent gain coming in from the frontline index. Bank Nifty is albeit a bit soft but still holding in the green, but that index is up just around 0.3%. It's FMCG today which is doing quite well. Tata Consumers just ahead of its earnings are quite excited, so that stock is up 6%. Nestle reported a good show when it comes to volume and the commentary. That stock has held up with a gain of around 5%, and then Trend 2 is holding in the green. So FMCG clearly seeing a bit of a green, while ITC Hotels continues to be in a downtrend. 160 for that one. Remember, the implied price per se was around 270, so clearly way off that. But we do have a battery of guests as usual. Ajay Bagga on the fundamentals, Kunal as well as Naresh on the technicals of the market. Naresh, wanted to ask you about the FMCG pack. Tata Consumers, Nestle, Trent, and a lot many others are actually holding up quite okay.
Given the fact that many of them corrected 25% from the top, a bounce back would be normal. And we've seen that the results has actually created bottom. So it started off with Hindustan Unilever. The stock corrected and recovered well from the lows of that day. And the rest of the numbers, we are seeing more positive action. So it looks like a short-term bottom is in place for the whole sector. And if there is some positives coming in the budget, there could be a larger bounce in some of the names.
Right. Kunal, what are you sensing? Does it seem like that this rebound is going to last, or do you think it's only up until the budget speech tomorrow?
So I think after today's move, one thing certain that the excessive shorts could probably be out of the system, and we probably would have seen the third phase of a short covering move on the index as well as on the stock specific front. The market seems to be a lot more balanced this time around. At least looking at it over the last 3 days of recovery and the sharper correction prior to that, which means that the markets are entering into a bit of a lighter mode going into the budget. The VIX has dropped down from 18.5 to 16.5. That is also another indication that the market expects that maybe post budget, you might not have a major sense of volatility which may creep into the stock, which may creep into the markets. But yes, intraday volatility for the budgets, I think that is something which should not be ruled out. But I think broadly, what we've seen over the last 3 days indicates that the markets could be a lot more stable than what was earlier.
Well, looking at the India VIX, definitely one is a little hopeful that maybe the volatility is going to ease off even further. But Ajay, hi, afternoon. Welcome to the show. What hint should we actually gather from the Prime Minister when he says that, he was praying to Goddess Lakshmi to shower the poor and middle class with blessings, hinting at what perhaps may be in the budget?
It's good. We can only applaud that. I hope they follow it through with some action. That will be the reaction. For the last 10 years, we have seen that everybody has to bear bear the load of all these schemes. But clearly, there is a difference between the economic poor and the electoral poor. The electoral poor are 80 crores who are getting free food grains every month. And then the huge distribution of about 2 lakh crores across states under various dole-outs, be it to farmers, be it to women, be it to other challenge segments. So the electoral poor are taking a bigger segment of the pie. That is the crowding out of the fiscal space. Again, I don't grudge them that, seeing we wrote off 16 lakh crores on corporate loans and MSME loans and farmer loans over the last 10 years. Giving out 2 lakh crores a year is par for the course, but there's no fiscal space left there. You have a low tax to GDP ratio. You have indirect taxes, which are very high. Household incomes in real terms are not growing. Household leverage has grown very high. It's reached 52% of household income. Government debt to household income has gone again to a record-breaking level. So we are reaching unsustainable levels on the fiscal front. And if on that you want to then become more conservative and bring down the fiscal deficit from 4.8 to 4.5, then the economy is bearing a big a constriction. And what is then needed is the monetary policy to do some heavy lifting. That, as we know, takes 9 to 12 months. So even if RBI cuts on February 7th, that will flow through in the economy over the next 9 to 12 months. The markets will move on sentiment earlier than that. But we have missed at least 3 to 6 months on the monetary side and fiscal side. We have not too much space. So I am a little bit concerned at the market sentiment being positive towards the budget because quite frankly, the space for the FM is very limited.
Bit more realistic with the expectations that we have. That's something that I've heard multiple times today, but just wanted to highlight UPL because the numbers came in. The company has reported a profit of 828 crores versus a loss last year. Even sequentially, there has been quite a bit of improvement. Looking at the performance, the management is saying that with this strong performance, we are confident of delivering our EBITDA and free cash flow guidance for the full year. So they're maintaining their guidance for the entire year. Net debt is lower by $740 million versus last year. But if you compare with March of 24, it is actually an increase to the tune of $363 million. But overall, things look like they're on a bit of a mend, and that's the reason UPL stock is holding in the green right now. Come tomorrow, of course, it'll be all about union budget for what it's worth. You also will get the auto sales data for the month of January. And just ahead of that, so far the earnings season has been decent for the auto pack and the stocks too have managed to recover quite a bit. Kunal, from the auto pack, is there a trade that you would recommend?
Yeah, I think quite a few now because earlier we were looking at M&M and Eicher Motors as the two top names in terms of price performance. But now I think you've seen a wave of short covering coming back into the underperformers. I think the best trade right now when we look at the risk reward is to go for a contra buy on Tata Motors, just about close to that 700 mark. It seems that the stock has come back into a bit of an exaggerated selling and the indicators deeply oversold, so that could probably be a good risk reward trade. Bajaj Auto is something also, even after the last 2-3 days of a mild recovery from 84,800 to now 8,800, 8,900 mark. I think that's also looking fairly attractive. The stock seems to have come back into a recovery mode, and looking at the way the stock had been sold off in the last, I think 14-15 weeks broadly, this could probably be a multi-week rally for Bajaj Auto. So multiple opportunities could probably open up into the auto pack.
Okay, and we've got the auto sales numbers as well come out tomorrow. But we're going to take a very quick break. Come right back. We'll continue tracking markets and the last half an hour of trade ahead of the budget session. Of course, there's Kalyan Jewelers, one of the most beaten down names. That has reacted very positively to its numbers, holding up 11% right now. Cyient is holding up 7% as we speak. There's Navin Fluorine reacting to its numbers. Tata Consumers, which has gained up about almost 6%. And then, of course, there are names like BEL, also an earnings reaction there, 4.5% of a move. Nestle, which is looking very smart in trade. L&T higher by about 4% after its numbers. And Trent has made it back to those 57, 70 odd thereabout levels. But let's tell you about Tamil Nadu Mercantile Bank and how their Q3 numbers have been. The fine print entails the operating profit has witnessed a growth of about 10% on an annualized basis. Meanwhile, the net profit grew about 6%. Let's also take a look at the asset quality, which has also seen a significant improvement. The gross NPAs improved by 37 basis points, while the net NPAs have seen an improvement by about 57 basis points. Well, that's not all. The deposit growth for the quarter also stood at about 7%, while the advances growth was the highlight, seeing a resilient growth of nearly 14% there. Okay, let's move on and let's take a look at some of the other movers in trade. ICICI Bank, Axis Bank, Bajaj Finance, Kotak, these are your laggards in today's trading session, at least so far indeed. But Ajay, what's been the call so far that you've seen in the market after the earnings, run up to the budget? Have the valuations eased off, and are you getting comfort buying anything or a sectoral call perhaps?
Sectoral, Aisha, it's IT and public sector banks. I think those two should be the outperformers this year. The big risk is not the budget. I think there is a lot of disappointment already factored in on the budget, though the markets have moved up over the last 3 to 4 days. But the market is going with a lot of healthy skepticism. So that's good. When your expectations are that low, the room for disappointment-based cuts in the market reduce. But I think the bigger risk is Trump tomorrow. So on 1st February, if tariffs come in on Canada and Mexico. That's a huge disruption of supply chains. It's about 25% on $900 billion is what we are talking. So is it only a negotiation tactic by Trump, or will there be some follow through and some economic consequences? Markets are on edge based on that. US exceptionalism is continuing, even though the last quarter GDP came lower, but the strong dollar, the long dollar and short everything else is the favored trade on Wall Street right now. And globally, traders are long the dollar. Third, I would say China's stimulus expectations are high. At least they will manage their market. They have been very clear in asking their big fund managers to buy more of Chinese stocks. So expect good returns from the Chinese market this year. Whether their economy does as well or not, that remains a question. So that's the big global situation for us. Within this, you need a fiscal and a monetary stimulus. Both have been lacking right now. So there the budget becomes important tomorrow. Hopefully, we'll get some answers on the fiscal. And then on 7th February, I'm quite positive that there will be a rate cut of 25 basis points and more liquidity enhancement measures as and when they can do it. The 54-day VRR and all has happened already, but we need another 2 lakh crores to come in to
Sure.
the market.
Yeah, and I guess that's something we'll perhaps hear more on in the next week when the RBI MPC meeting really happens. So that's another factor to watch out for. In the meantime, I wanted to just put the focus on UPL once again because it's a profit versus loss that the company reported. They're talking about they're in line to meet their annual guidance with respect to cash flow as well as the EBITDA margins. Even if you look at it on the balance sheet basis, there is a bit of an improvement because net debt is lower by $264 million versus the level that we had seen in September. And that's the reason the stock has shot up. In fact, the volume growth has been strong at around 9%. The price growth has been strong at around 5%. Overall, the revenue growth is 10%, and that's because there's a negative FX impact to the tune of 4%. Overall, the margin is quite steady, in fact, quite good actually at 41%. It's up almost 1380 basis point on a year-on-year basis. So, stellar show coming in from UPL, and that's the reason that stock has managed to recover a solid 8% as we speak. Naresh, a quick word on UPL and just ahead of the budget, is there a trade that you would want to carry from today to tomorrow?
So UPL looks an interesting case at current levels, starting off with a smaller position and add on the way down 590 odd levels. The stock on the long run is setting up for an eventual breakout above that 620 mark, which was the high for the last 12 to 18 months. So looks promising, good volumes right now, post numbers. So that would be a stock to take a watch on, and L&T could be a trade for the budget as such.
That's a take coming in as far as a couple of these stocks are concerned. But Ajay, on that note, we let you go. Thanks so much for making time and speaking with us today. In the meantime, I think Sun Pharma's numbers will be flashing for you on the screen. It looks like it's a decent set coming in. That's the first number that we have for you on the screen. So let's wait by to get more reaction. But 2,900 crore thereabouts is what the profit figure is suggesting versus the expectation of 2,850 crore. And that's why a bit of a perk up on that stock at this point of time. Separately, Kalyan Jewellers is doing very well for itself, 15% higher. A lot of these railway counters are excited. Maybe they are expecting some big bang announcement come tomorrow. So Ircon, BEML, RVNL, these are some of the names which are holding in the green. And overall, there has been a bit of a comeback of the public sector entities. So whether it's an NBCZ or a Garden Reach or even other names like NHPC, Mazgaon Dock, they're all holding up very comfortably between 6 to 10%. More numbers will trickle in for the pharma pack, but before that, let me take it across to Kunal to ask him, Kunal, do you think public sector entity trade is coming back this week? If you look at the PSE index, that's managed to recover quite meaningfully.
Yeah, definitely. I think many of the sectors within the PSUs, they are making a strong comeback. PSU banking stocks, for example, they are looking quite strong. Some of them are looking quite strong. Some of them are getting back into a recovery phase. For example, Bank of India, I think, is one of the stronger name. From the PSU banking lot, then you've seen recovery for the likes of SBI, then recovery coming back for Bank of PNB, as well as the the smaller banks, the Bank of Maharashtra, etc. So that's one space where we are expecting that the markets could probably get back into a slow, steady, gradual recovery. The other space, the defense stocks, I think that's another pocket which is looking extremely attractive. We were discussing a few days back that Mascot Dock is the stock which is been one of the outperformers. But the likes of HAL, BEL, these stocks have made a very strong comeback. It's almost like a 3-day, 4-day short covering move where these stocks have moved up 10% plus. From their recent swing lows. That's a very strong kind of a short covering move, almost like a V-shaped recovery for these names. And then compare this with the likes of BHL, etc. Even these stocks have been looking quite charged up. So I strongly believe that the PSU sector, the PSU move is likely to come back. But then I think picking the stocks and trying to time it could probably be a better strategy rather than just buying this on the highest degree of momentum.
Don't be in a rush to buy these stocks. The uptick has been very, very steep indeed. We'll take a very quick break. When we come back, we'll chat with Gurmeet Chandha. Well, some more numbers from Sun Pharma, which is right now at least optically looking like an inline set. The US formulation sales have come in lower, a smidge, about 0.7%. The India formulation sales have seen an uptick of nearly about 14%. The global specialty sales, which account for 21% of their sales, they stand at about $370 million. And the emerging market formulation sales, they've come in with an uptick of about 10.1%. The R&D investments for the quarter gone by now stand at 845 crore rupees. That's the Sun Pharma scorecard for you as of now. But let's get you some more earnings highlights and a significant milestone in its illustrious journey. South Indian Bank celebrated its 96th Foundation Day with a grand inauguration of its new office, SIB Tower in Kakanad in Kochi. The newly inaugurated SIB Tower stands as a testament to the bank's remarkable growth and ambitious vision as it moves toward a centenary year. In fact, the event saw speeches from Chairman Vijay Kurian and MD and CEO PR Seshadri, who highlighted the importance of this milestone in driving operational excellence, innovation and a progressive work culture as well. The celebrations also saw the presence of board members and past directors, retired employees and valued customers, reinforcing the institution's enduring relationships with its stakeholders. Okay, let's just mark what the markets have been up to. Just a few odd minutes to go. I can't say for the week because tomorrow is the trading day and a full-fledged one at that. We'll, of course, see you at 7:30 a.m. right here for the Union Budget coverage. But we're going in okay. About a 200-point move is what you've seen on the index futures. We're at 23,600 as we speak right now. Infrastructure, capital goods, power, typical budget trades are the ones which are actually leading, other than, of course, some of the earnings reactions as well. But here's the big market call from none other than Madhusudhan Kela, telling us about what he's making of the markets right now, what with the small and mid caps, what the year ahead is going to look like, and, of course, his expectation from the budget as well.
I think broad indices, in my opinion, Nikunj, will be range bound. I don't know the range, but I don't see really crossing what we had, like 26,500 on the upside. And maybe on the downside, you can assume, in some really bad news happens. So there could be the 5-7% more downside also from here. So Nifty may actually fall far less than what the broader market will do. And the pain real is in the broader market. And this is why I'm saying that we'll have to be really sharp to make money in this year. And we can't afford to overpay for things which we like also. Small and mid caps, which are cheap, where the risk reward asymmetry is in your favor. And some of these companies have not done well for even last 1 year or 2 years. Like some of the, for instance, if you look at the NBFC space, it has not done well in the last 12-18 months. So you could find even mid-cap and small-cap companies on that universe, which are very attractively priced. So all I'm saying is that let's not generalize the entire mid-cap and small-cap as one segment. There will be a lot of value buys in mid-cap and small-cap. And even after this fall, there will be a lot of sales also at the same time in this category. The trade may shift from that overvalued stocks to deep value. And that is what we are beginning to see. That, some of the, like you see, for instance, in the last 1 month fall, financial stocks have fallen the least, or some of them have even gained, even in this kind of market. Select private sector banks, select NBFC companies, select financials have gained. On the other hand, some of the capital market stocks, which we did very, very well in the last 3-4 years, they have corrected in the last 1 month. So within financial, you can see the contraction which is happening. So I think the trade clearly is shifting more towards value, and investors maybe in this year will find it very difficult to make money in overvalued companies, which was maybe the case for last 2.5, 3 years. How can the India story be over just by the 10-15% market correction? That is not what makes India. What makes India is really the long-term sustainable growth which we have in this country, our positioning in the global market, where this is one of the most attractive destination from a FDI perspective also, and even from a long-term investment perspective. Right? We have, I don't know of many countries which have a promise to grow at 6.5-7% for the next 5 to 10 years. So that is what makes us attractive, and that attractiveness, in my opinion, has not gone away just because we have seen some correction in the stock market.
Okay, let me get in some BTST trades as well as we wind up for the day today. Kunal, what's on your list?
So I'll go with two buy calls. The first one is a buy on IDFC First Bank. Looks attractive for a potential upside of 68. Stop loss could be kept at 60. And the second would be a buy on ITC, expecting that this move which we've seen today for the stock, almost like a 3%, 2.5% move, could see a follow-through up move. 457 as a target. Stop loss at 439.
Right. Naresh, what about your BTST ideas?
So first would be a buy on MGL. The stock has given a short-term breakout. Stop loss at 1360, target price of 1400. Second is a buy on Coal India. Good price action today. Stop loss at 388, target price of 402.
Okay, those are some BTST ideas coming your way. We're going to begin winding up for the day. And it's not been bad, actually, going into the big event tomorrow. It seems like some short covering was definitely in the works. And would be interesting to see whether today also there was a sell figure from FIs or not. Perhaps it would, and DI quantum as well would be quite high in terms of buying. 279 points higher, that's how we're closing in. As we step into the Feb series, there's been Tata Consumer, which has reacted positively to its numbers, holding in about a 6% is where it's starting shop for the day. BEL as well, a strong uptick coming in after its numbers came by. Almost a 5% move is what you've seen. Trend still a long way to go before it even makes to that 6,000 mark. But it's done not all that bad at all. Today, a solid 4.25% move coming in. 5,700 thereabouts is still where that stock is. Nestle, Coal India, even Titan has done well. Innocent Bank higher by 3.5%. Hero MotoCorp has done very well. And so is the case with Tata Motors and Tata Steel as well, which have held out quite smartly. I want to see what the FMCG basket is doing, not just Tata Consumers, but even the likes of an ITC and Unilever got pulled up along with it. And some of the consumption plays did not look bad at all. Some of the auto plays looked quite okay. Tata Motors saw a bit of a bounce. SBI held out about 1.5%. Reliance was up nearly about 1%. There was M&M, which also looked higher. HDFC Bank, finally towards the fag end of the day, managed to pull it up in the green, about almost 0.5% or so, but still languished for Bajaj Finance, Bajaj Finserv, ICICI Bank, Bharti, which was a top laggard on the index today. But then again, only on a relative basis, the dip was less than 1% on Bharti, and Sun Pharma as well, which turned out to be as a laggard today. There was BOB, Divi's Labs, Torrent Pharma, Jindal Steel. These were some of the laggards as well from within the liquid universe. And on the flip side, you did have Kalyan Jewellers, which did see a big rebound today, 12.5% higher after its numbers. Naveen Fluorine, Hudco did very smart, about a 6.5% uptick there as well. There was Cyient, which held out by 7.5%, and IRB Infra as well, which looked good by about 6.5%. So if you were to really drop a trend, it's a typical budget trade that played out today with PSCs making a comeback and big focus on the infrastructure names leading the charts, other than some earnings reactions also. But that's pretty much it in this edition of Closing Trades. We'll see you again tomorrow morning at 7:30 a.m. with all the market and budget action live.